Hello, welcome. I'm just waiting for people to join. All right, let's slowly get going and then we'll see as people drop in. My name's Tatiana George, and Yvonne Lam and I are going to be running the webinar for you today. We are thrilled to be here. Thank you, UAC, for the invitation. Thank you for organization, Tracy, and thank you, Jenny. I hope you can see our screen. Per default, all of your mics and cameras are muted. If you've got any questions, please use either the chat or a Q&A, and then we'll come back to the questions at the end. All right, let's get going. So today we're going to speak about the new APRA Prudential Standard CPS 230. Yvonne and I have been running these seminars and webinars for a while now, and we feel there's a need to explain and simplify things significantly from the actual text of the law and the requirements that APRA has recently issued. So today we'll try to demystify and make it very, very simple for you to understand what exactly that means for your business and what you need to do next. All right, let's start with intros. Yvonne?
Thanks, Tatiana. Hello, everyone, and thank you very much for joining us today on today's webinar. My name is Yvonne Lam, and I'm a principal at Gilchrist Connell. I head up the corporate insurance and insurtech team and advise the insurance industry on legal, compliance, and regulatory matters. And now I'll pass you back over to Tatiana to introduce herself formally.
My name's Tatiana George. As I said, I'm the CEO and founder of Curium, a compliance and claims specialist. We use deep know-how in insurance and technology to make things simpler and easier. I've been in insurance industry for the last 17 years. I worked in more than 25 countries before I came to Australia almost 7 to 8 years ago. And then when I exited my consulting businesses and firms, I was the first head of claims and operations for Bull Zebra before starting Curium. So before we get into this, just very, very briefly about why we're here today. So as I said, Curium uses the state-of-the-art tech and compliance know-how to make things simple, to effectively run compliance better than your people can do, and definitely cheaper than they can do. We eliminate major time wasters. We are not letting you reinvent the wheel and create new complex frameworks over and over again. We put you in a strong position for CPS 230 negotiations with the underwriters and your contract partners. And Curium has a track record of significantly reducing the breaches and a significant track record in increasing people's understanding of compliance. Our mission is to give insurance professionals superpowers.
Thanks, Ed. Yeah, I'll just say a few words about Gilchrist Connell. We're an Australian law firm focused on the insurance industry. We started from our offices in Adelaide in 2008, and now we've expanded to have offices across all Australian mainland states. So our firm works with a broad range of clients in the insurance industry, from underwriting agencies, brokers, through to Lloyd's syndicates, and local and international insurers. And of course, insurtech companies like Curium on providing innovative solutions to issues in the insurance industry. So we've been recognised for our expertise in most recently as the Australasian Law Awards Insurance Specialist Law Firm of the Year in 2023. And my team specifically specialises in advising clients on corporate and regulatory matters across all stages of the business life cycle. So that spans assisting with establishment of operations, licensing and distribution arrangements, compliance with financial services regulation, expansion, where you might be looking at mergers and acquisitions or restructures, and navigating regulatory investigations by financial services regulators. So on the agenda for today's webinar, we'll first be running through the key elements of what CPS 230 is and why it's being introduced by APRA, before we move on to the implications for the insurance industry, so different players such as underwriting agencies, brokers and suppliers, and then we'll be finishing off with some practical tips on how to get ready for this change in regulation. And as Tatiana's mentioned already, if there is time at the end of the session, we're very happy to run through any questions that you might have at that stage. And there's a Q&A button, I believe, at the top of most of your screens that should be available for you to put in your questions. So what is CPS 230? It's likely many of you would have heard the term being used around the industry lately. It's referring to a new APRA prudential standard that's being introduced to make sure that APRA regulated entities, so that's your insurers and reinsurers, remain resilient to operational risks and disruptions. So in recent years, there's been an increased number of operational risk control failures and some severe disruptions to business in the industry. So this includes data breaches, like the one that was suffered by Medibank Private as a health insurer, and also large-scale events such as the COVID-19 pandemic and natural disasters in Australia. So in that context, APRA made the decision to introduce this new prudential standard for its regulated entities to make sure that they can effectively manage their operational risks, maintain critical operations through business continuity planning processes, and relevantly for today's audience, manage risks arising from their service providers. There is a fairly long lead time for CPS 230. It's not due to start until the 1st of July 2025. But the reason why the industry has already started to prepare for the incoming requirements this year is because APRA signalled to insurers last year that it expects companies to be proactive in their preparations and to start moving towards compliance in stages. So what that means is that insurers are required to be identifying what are considered to be their critical operations and material service providers by the middle of this year, and then setting tolerance levels for disruptions to those critical operations by the end of 2024. Now, CPS 230 is going to be replacing and superseding some existing APRA prudential standards. So these you might have heard of already, CPS 231 on outsourcing and CPS 232 on business continuity. There will be some continuing prudential standards that will operate alongside CPS 230 when it comes into effect. These are CPS 234, which is on information security, and then CPS 220, which is on the overarching risk management requirements. So APRA's recently announced that there will be an extension period available to certain APRA insurers for the move to the new requirements. So these are the non-significant financial institutions, which are insurers that have total assets below 10 billion Australian dollars. Those non-significant financial institutions will have a 12-month extension from the 1st of July 2025 start date on certain requirements relating to business continuity and scenario analysis. But during this period, if they do plan to use the transition extension, they need to continue to comply with business continuity requirements under CPS 232. Okay, I might just move across to the next slide. Tatiana. Now, what does operational risk mean for an insurer? Unhelpfully, the prudential standard doesn't specify exactly what an operational risk is, but it does say that operational risk is inherent in all products, activities, processes, and systems. And it does include a non-exhaustive list of a range of risks that are captured by the standard. So we put them on our slide today. These are your legal, regulatory and compliance risks, conduct risk, technology risks, data risk, and change management risks. So they're generally known as your non-financial risks that emanate from your business operations, processes and systems, or perhaps the behaviour of your employees, your IT systems, changes in the law and regulation. Now, a lot of what is required under CPS 230 for insurers hinges on of the concept of a critical operation. So this is defined and it's the trigger for a lot of the obligations and needs to be identified by insurers by the middle of this year. So these are processes that are undertaken by the APRA regulated entity or its service provider, which if they're disrupted beyond tolerance levels, would have a material adverse impact on depositors, policyholders, beneficiaries, or other customers, or the insurer's role in the financial system. It's pretty broad. Now, APRA does require insurers to, at a minimum, classify all claims processing operations as critical unless it can be otherwise justified. And they also need to make sure that their customer inquiries and the systems and infrastructure that are required to support their critical operations constitute critical operations themselves. So I'll just pass you over to Tatiana to take you through what this means in practice for different areas of an insurance business.
Thanks, Yvonne. So basically, there's a standard that regulates APRA license holders. However, why is it so important, and why are we here, trying to understand it today? Because whilst it directly regulates APRA license holders, it will indirectly regulate everyone who falls under this definition of being a critical operation or risk for an insurer. And if we're very, very honest and putting our hand on heart, it's going to be probably majority of people in this room, as well as majority of the people in the industry. So anyone who's touching a claim, like a third-party claims administrator or even a technology company providing claims technology, will be subject to indirect AFCA regulation. APRA regulation. Underwriting as a critical operation, obviously an underwriting agency has it in the name, so it definitely falls in the scope. Anything that has to do with risk management, effectively everything has to do with risk management. The moment you touch the customer or the money, that's it, you're in. Core technology, internal audits, and material agreement with other firms. So the interesting bit about that, usually until now, only AFS holders or authorized representatives of AFS holders were somehow in touch with APRA regulations and had to do things. However, CPS 230 significantly increases the circle of people who will be impacted by that. So, I mean, for example, suppliers to insurance industry who are not holders of any financial services license will also fall under these critical requirements from insurers. Now, in practice, what does that mean and how is this going to work? Since APRA does not have a direct authority into underwriting agencies and a wider business community, what will happen is it will put an obligation to regulate and to supervise on the insurer. So again, practically, what that would mean, it would mean that an insurer will take the standard, interpret the standard, and will require certain things from their partners. And their partners are definitely underwriting agencies, third-party claims administrators, any large or significant suppliers. Now, interestingly enough, there is no definition of a size here. So it doesn't matter how many policies you have. It doesn't matter how big you are. As long as you touch a critical operation on the left-hand side, you're in. So that's why we believe it's a very, very significant shift in what APRA is now regulating, even though not directly, but through the insurer. So APRA describes the concept of a third party. So let's say an underwriting agency is a classic example of a third party. And let's say if an underwriting agency is using a TPA to manage claims, that would be classified as a fourth party in these APRA standards, and all of those would fall under the requirements of CPS 230. So I'm not sure if you already started seeing changes in the contract. Some major insurers have already started changing the contracts, and sometimes you can even see the exact extracts from CPS 230 regulation or even mentioning of that in your contract. So this is practicality, what people are already going through in preparation for that deadline that Yvonne mentioned.
So as Tatiana has mentioned, the nature of the insurance market means that material service providers to insurers will be indirectly impacted by CPS 230 requirements. And that's because in order for insurers to comply with CPS 230, they need to maintain something called a material service providers register. That's going to be submitted to APRA annually. First one will be due 1st of October 2025. And they will also need to have a comprehensive service provider management policy. So that covers off how the insurer will be identifying their material service providers and managing arrangements with them, including any material risks that are associated with those arrangements. So what is a material service provider? It's one that an insurer relies on to undertake a critical operation or which exposes the insurer to a material operational risk. So there will be an identification process being run through by insurers now to work out who falls within the category of a material service provider. Now, CPS 230 does say at a minimum, certain providers must be classified as material service providers unless you can otherwise justify it. And these are the functions that Tatiana's already run through: underwriting, claims management, insurance brokerage, and reinsurance services, as well as risk management, core technology, and internal audit. Now, there is some guidance that APRA has recently put out from a lot of questions they were getting around whether all insurance brokers are captured by CPS 230 or only certain arrangements that might be more significant. So APRA has clarified that they're not intending to capture the sale of any insurance policy to a client through insurance brokers. They're only looking to see whether that particular provider might be perhaps working under, say, a binder agreement, or might be otherwise exposing the insurer to a material operational risk or supporting another type of critical operation. So there will be a level of assessment that the insurer needs to go through to work out what each supplier or service provider is doing for its business. And it does capture a pretty broad range of different entities. So a material service provider can be a third party, it could be a related party or connected entity to the insurer. And it could result from just one arrangement that you have with the insurer, or you might have multiple arrangements that mean that you fall within that material category. Now, CPS 230 is a little different from the previous prudential standards in that it goes further than just your material service providers, so your third parties. It also defines the concept of a fourth party, which is a party that a material service provider relies on to deliver services to the APRA-regulated entity. So this captures your subcontractors and other parties who will then indirectly fall within the scope of CPS 230. Now, if we just move on to the next slide. Now, CPS 230 says that an insurer is expected to outline, as part of the service provider management policy, the approach that it takes to manage the risks associated, not just with the third parties, but also your fourth parties that the material service provider relies on to deliver the critical operation. And the insurer needs to take reasonable steps to know who those fourth parties are. So they need to be able to list those fourth parties that are involved in the delivery of a critical operation when they're putting together their material service provider register. And supporting all of that, beyond just the register itself, there's also an obligation to have formal agreements and also robust monitoring in place for the third parties and the fourth parties. So that will be all captured in the policy. So it's the approach the insurer is going to be taking to entering, monitoring, substituting, or exiting any agreements that they might have with their material service providers, the approach that that's going to take to manage the risks it's identified, and also the supply chain risk that comes from the identification of the fourth parties involved. So before they enter into or change their material service arrangements, insurers will now need to be making sure they take appropriate due diligence, going through a selection process and assessment of that service provider's arrangements to make sure that they can continue to provide that service on an ongoing basis. They'll need to be assessing the financial and non-financial risks from relying on that particular service provider, including any risks associated with, say, the geographic location, the concentration of that service provider, or the different parties that they're relying on to actually deliver the service. That's going to then be all outlined in formal legal agreements. So there are particular content requirements under the CPS 230, which will mean that insurers are going to be looking pretty closely at particular prescribed areas of those contracts. We've listed them on the slide, but you'll see they will cover off your services, associated service levels, and also a pretty broad range of the different rights, responsibilities, and expectations of the parties to the agreement. So there's going to be a lot of focus on who owns the different assets to an arrangement, who controls the data, what happens if there's a dispute between the parties, importantly, audit access, making sure that the insurer has access to records and inspection rights in relation to the services that are being provided, as well as access by APRA if they need to look into particular regulatory arrangements, and also liability and indemnity provisions. There's also going to be quite a strong focus on making sure that the insurer can meet its legal and compliance obligations, so making sure that they have assistance and cooperation rights in there from the suppliers, and also notification requirements on the material service provider where it's choosing to use other service providers, so subcontractors, those fourth parties, to provide the service to the insurer. And that's going to be supported by liability provisions for the failure of any subcontractors to deliver particular requirements. Now, some of these categories of contractual provisions might be pretty similar to contracts that you might have in place already with your insurer partners, because there were similar styles of requirements under CPS 231 on outsourcing. But they're not exactly the same, and the requirements under this one will be broader than the existing requirements under CPS 231. There's also the issue that it captures a broader range of service providers. So it might be that while you might not see these provisions in your existing contracts with insurer partners, if they identify that you fall within material service provider, you're delivering a critical operation for them, then you might start to see these provisions coming into place when you're negotiating any contract renewals or any new arrangements or contracts that you're entering into with those insurers going forward. There is a transition period that is available for insurers that have existing contractual arrangements with service providers. The transition period allows for the CPS 230 requirements to only apply from the earlier of the next contractual renewal date, or the 1st of July 2026. So everything will move across to the new requirements by the 1st of July 2026 if you've got something in place already. Now I'll just pass you back to Tatiana to take you through what this means in practice.
So yeah, if we stay on this slide a little bit, so what that de facto means, so whilst you've never dealt with APRA before, you will not deal with APRA directly before. However, if you think about your obligations, your regulatory obligations, for example, that come from your AFSL license and so on, these amendments to your contracts will form part of the obligations. And as Yvonne was saying, often they will replicate the APRA standard. So you will see them in your obligations register going forward in one way or another. Now, the reason we're here today is because we want to prepare you for that. Because I guess in practice, we already see some almost horror scenarios where, for example, a new agreement is being negotiated and very, very harsh provisions for CPS 230 are put in there without any limit of liability or extent of assistance, as Yvonne was mentioning before, of what the supplier needs to do in case an insurer needs anything. So that is kind of very dangerous, depending on the size of your business and your financial and human resources. It might be quite a draining exercise if you need to prove something to the insurer. That's why what we'll try to do in the rest of this meeting is to prepare you practically, not to push back, but to effectively navigate this, understand what that means, even though you're not directly regulated by APRA, but understand what is the essence of this, what is it that they're looking to regulate. And insurers do it in a way by putting more contractual obligations on you. However, this can spiral in cost very quickly and complexity. So what we're going to try and discuss today is how do you manage this and how do you go through this in an informed manner without going bankrupt by trying to serve everyone and everything. So as we're saying, the standard will have a severe impact on agencies and every other material service provider to the industry, including claims managers and potentially builders, loss adjusters, everyone who's touching a critical operation within an insurer. So what are the likely scenarios? The one we just discussed is a change to core agreements. That's for sure that's happening. Sometimes it comes as a renegotiated agreement. What we've seen happening, it also comes as an amendment. So there's a 2-pager, 3-pager that comes in addition to your existing agreement. Happens all the times. Definitely CPS 230 provisions will be in all new contracts going forward. I've seen one TPA trying to strike it out, and that was a deal breaker for the entire deal. So they could not even negotiate on that. Also because they couldn't prove that they've got anything that speaks to the essence and the substance of how they're actually managing their operational risk. So in addition to that, you will likely see more supervision requirements. Since APRA is not looking at you directly, then you're going to be supervised by the insurers, so by your partners. So you'll have a higher burden of reporting and evidence that you're actually running a good operation. Increased requirements specifically to risk and compliance frameworks, to documentation, to tests and of your control and their effectiveness. The demonstration how you're going to be complying or how you are already complying with the information security standard, the one that Yvonne mentioned before, the 234. Increased requirements to documentation of key policies and the business continuity plan. So Gilchrist, Connell and Curium have run a live simulation a few weeks ago with major insurers, broker networks, reinsurers, and some agencies. And one of the interesting takeaways from that roundtable was that a BCP, a business continuity plan, takes a whole new meaning in this new world. So it's definitely worth looking at it and playing kind of the most probable scenarios and literally playing it or scenario played with the key staff in your firm. What's also going to happen, what we're expecting and already seeing, changes to training standards of your key people. So not just a theoretical tick the box, I've done the training, this and that, something more practical and a demonstration of this, for example, like this BCP training plan and so on. And inquiries and contract reviews with suppliers, so secondary inquiries. So for example, an insurer is inquiring and changing the contract with an agency, but then is also expecting to see how agency is working with its partners, the ones that are performing the critical operation. The most classic one, the real life case study that we ran, or one of them, was the phone lines. Phone lines are down for, I don't know, 6 hours, 7 hours, 8 hours, or servers are down. So everybody becomes impacted by this. It's my favorite image, the ripple effect. It's going to touch a lot of people in the industry, and as I said, irrespective of their size. So Yvonne's going to take you through CPS 234 is that information security standard that was implemented before, and we are now facing the new one. And so we're going to learn some lessons of what to do and not to do when implementing the new one.
Yeah, so what we've got on the slide is actually a timeline that APRA's put forward on implementation. So where we're at the moment, they've just recently released their final prudential guidance, CPG 230, in June this year, which sets out the sort of practical steps they're expecting insurers to take as they start having these conversations with the third parties and the fourth parties in their supply chain. So we're also now coming up to we're already in the middle of 2024. So this is that trigger point I mentioned earlier where APRA is expecting insurers to have already gone through that identification exercise of identifying who is a material service provider and what constitutes their critical operations. Now, this means that some of the people on today's call might already be getting contact from insurers where you're on the list of that material service providers, and they will be speaking to you soon about those existing or upcoming service provider contracts if they haven't got in touch already. And then we move forward into the milestone at the end of this year, which is that insurers should be positioned to be setting their tolerance levels. So these are their tolerance levels for maximum amount of time that they're willing to tolerate, disruptions to their operations, any data loss, the maximum amount of data loss associated with any disruption, and the minimum service levels that are required for alternative operations during a disruption. So what we're seeing is that insurers may or may not decide to then speak to their material service providers to get a sense of how realistic some of the tolerance levels they are setting within their business and what it means to have certain alternative arrangements as a fallback if they do suffer a severe disruption to their critical operations once they work through that. So that'll be closer to the end of this year that you might start having those conversations. And then 1st of July 2025, of course, is the official commencement date for CPS 230, except for the extra transitional period that I had mentioned for non-significant financial institutions for certain business continuity and scenario analysis requirements. And that transition period that will be in place for existing contracts that will be renewed with service providers. But by the 1st of July 2026, all CPS 230 requirements will be in place for the whole industry. So we've got a couple of years from now until then. And what can we learn from the implementation process that took place for CPS 234, which is the Prudential Standard on Information Security? So if we contrast the implementation timeline for this Prudential Standard to the one for CPS 234, that one was announced in November 2018, and then it commenced on the 1st of July 2019. So a much shorter, more condensed lead time. And as the name suggests, it sets out obligations that is designed to manage the security risks that are associated with the information assets for insurers. And it also imposes certain oversight obligations on third parties that manage the APRA-regulated insurers' information assets. So there are some parallels that we can draw on where there are similar concepts that are imposed on insurers already in relation to the way that they need to monitor and oversee the management by third parties and fourth parties of those that touch their information assets or help them manage it, even if it's outsourced. So what that meant at the time that it came into place was that there was a lot more introduction of concepts into your contracts around security, audit, notification obligations in service provider arrangements relating to information assets. So a lot of your data management arrangements at that stage. But the difference here is that CPS 230 relates to a much broader range of operational risks, not just your data. It's going to capture, as we mentioned, all the sort of different operations within your business. So the underwriting, claims management, internal audit, various different aspects. So it's much broader, a much broader range of operational risks that will be captured, which explains why it's a much longer lead time compared to CPS 234, because there are so many aspects of an insurance business that need to be worked through with the supporting contracts that go with it. Now, with CPS 234, though, there were quite a few entities that took some time to process what it meant from them in practice. So we could say that in hindsight, there were some entities that were late to the party. So while it took effect from the 1st of July 2019, we're still hearing that there are some entities that are not fully CPS 234 compliant because it's got so many levels of obligations and touches on so many different parts of the supply chain associated with the data. And APRA is actually now, a few years on from the introduction of CPS 234, they've required boards to go through an external auditing process. So they call it a tripartite cyber assessment. So some of you might have been involved with this already to review your CPS 234 compliance. So that involves not just the insurer, but those who are involved in the supply chain of delivery of the information asset management process. APRA's reported recently that they're quite dissatisfied with the results that came back in from that tripartite cyber assessment for CPS 234, because there are some pretty common control gaps that have been identified across the industry. There's been very limited assessment of third-party information security capability. There's some the lack of regular review and testing of incident response plans going on in that space, and also some fairly inconsistent notifications that are being made to APRA in relation to information security incidents or control weaknesses in that space. So as a takeaway from all this and CPS 234 and what we can learn from that, while these types of regulatory requirements are being imposed on APRA on the insurers as the direct regulated entities. If there are material service providers and fourth parties that support those APRA regulated insurers, but they're not able to uplift their processes and systems and controls to meet those enhanced requirements for operational risk management, which will soon be coming into effect for CPS 230, and which will be outlined in your different service contracts. There is a risk that some of those intermediaries, because of the high level of scrutiny that the insurers are coming under, they might lose business because there's quite a strong push to have the whole industry move towards a much higher standard of what's expected to make sure that the whole industry stays resilient if there is something that comes in to disrupt the business. I might just pass back to Tatiana to expand more about what that means.
Yeah, so hopefully no horror scenarios here. This is I just wanted to share some experience. So we are on the ground dealing with risk and compliance day in and day out. We work with a lot of agencies, brokers, suppliers, smaller players, small insurers. We see a couple of blind spots usually when it comes to their own in-house capabilities. And the big message from here is do not take this lightly. Actually do the job. And I'll share some of those biases and the blind spots. So people usually see no value in compliance. So they don't see a value of compliance to customer to trust, and they see it effectively as a box ticking exercise. And if this attitude comes from the top, then be sure the first line of defense or the people who actually run your business, they'll very much see the same. And when something happens, they won't be equipped to act on it and to inform you straight away. It's one of the very big problems. Then another blind spot, I've heard it so many times, I cannot tell you. My company is too small to be on the radar for any regulator. Is another one. Well, in this case, even Curium, even we're not providing a financial service, we are falling under this requirement. It doesn't matter how big or small you are, it only matters what you do. Even if you have one policy as an underwriting agency, you still fall under the full scope of the requirements. And it's not going to be the regulator enforcing it. It's going to be your insurer or your insurer as a security or insurer as a partner enforcing it, or potentially your agency or even another intermediary enforcing it on you. So it's not going to be APRA directly looking at you, unlike, for example, with ASIC in financial services where you deal directly with them, or AFCA, right? Then another one, I hear it often from MDs and CEOs, my people are doing the right thing, thus we might be compliant. Well, as I said in that, roundtable that Curium and Gilchrist Connell ran, we found so many scenarios where we were expecting people to know what is the right thing, but actually there's no guidance for them and there's no way of communicating when something really happens. So the scenarios are actually not clear if you're not explicitly making them clear, writing them up and training them. And finally, compliance is just an extra cost and a paperwork. I need to keep it to bare minimum. Yes, all correct. You need to keep it to bare minimum because it costs. However, it also keeps your business intact, and it's protecting you from any major loss. You don't want to be seen on the first page of a major magazine saying, "Oh, because of that failure of some phone system or something mundane as that, you suddenly found yourself out of business and on the front line of some really bad article." So instead, why do you need to care about this? First, as I said, size is not a parameter as long as you're a critical operations provider. That's it. What you need to understand right now, you just kind of think about it yourself. What is the gap between where you are today and what good looks like? And what I mean with that is, do you actually have an operational risk management running? Do your people on the very, very simple operational level, if something happens, do they know what to do? Do they know who to call? Do they know which button to press, who to inform? Does this happen today? All right. And do you also know people you're working with and relying on? How are they positioned in the in the way they provide their service to you. What do you know about their businesses? Do you have trust that they're actually doing it right? Now, because everyone's going into data, ASIC, APRA, everyone, they do not want the old school methods of, paper audits and things like that. If anything happens and if anything draws anyone's attention, they will want all data from you. They will not want stories and interviews. They will want to see the real thing in data. So, and as everyone was mentioning, we are seeing a lot of contracts that come with this, extensive requirements. As I said, sometimes without any limit in assistance to provide data, access, resources, anything that's required, especially for investigations or audit. So if you've got your own data, if you're actually generating high quality data, this significantly limits your cost and your potential liability going forward. And that gives you a very, very good position to negotiate on any changes of contract. This is a real asset. And finally, no matter how you're running compliance now, you're likely to have a higher cost of it than you even think, and that's even on your books. And with this new regulation coming, the cost of hidden compliance is going to be even bigger. What do we mean with that? The hidden cost is usually what people do and don't necessarily notice or account for. For example, I've been speaking to a COO of a fairly large underwriting agency and asked him what he thinks he's spending on compliance in terms of time. And he told me easily 50% of his time. Instead of running the company and the operations, he's worried and bothered that, there's something that may come up or some new regulation that he wouldn't know about and so on. So the hidden cost of compliance is very high. So the more you invest in actually, as I said, as I call it, get your own house in order, the cheaper it's going to be and also more obvious. So now, as you prepare, as things are happening, this is an unusual situation for you because, as I said, you're not going to be regulated directly. And so there's no a single guidance to this is a go and this is a no-go, right? Because every single requirement that you're going to face are going to be dictated by the party who interpreted the law in a certain way. However, we believe there's some common trends in this and there's some common tips what we can give you based on our practical experience. So first, start conversation with your APRA regulated partners straight away. Try to find out what are they thinking and how are they thinking about it. The earlier you know, the better you can prepare and potentially push back. Run your own assessment of the state of your compliance today. Look at your own gaps and just get like an honest sense where you are today and what you need to do. Introduce or enhance depending on. So usually IFSL holders have an obligation to have a risk framework. However, every single one that I've seen, I would say, is quite underwhelming. So you probably need to up your game a little bit on the risk framework, but focus on practical stuff, not on overthinking some potential future something, but just really, really focus on the practicality of your risk framework and set up operational system. What I mean with that is, do your people know what to do? Can they spot a risk? Can they spot an incident? Do they have a button or a call or something to push when this happens? Very, very, very simple things. Again, introduce or examine your business continuity plan. As I said already twice, it becomes almost a centerpiece of the testing and how well your operations work in case of a disruption. Be proactive in providing working solutions to your partners. And I know it's hard sometimes. A lot of the times, and I've seen it, as kind of agencies, they feel so small that they cannot say anything, let's say to a large insurer, or a small provider cannot push back, or it doesn't feel like you can say something. But if you understand the concept, they want to see that you are well governed, your people know what they're doing, and you have a running operational risk management in your company. You're very likely to spot something early and to mitigate, assess, and potentially stop it early. That's what they're looking for. So if you can assist them and provide them with evidence or some kind of data process, whatever it is, demonstration that it's working, you can soften those requirements and those contractual obligations that, as I said, often set no limitation of liability. And then finally, for you, identify the parties that you work with that are your critical partners, that if they fail, that your business is going to stop or will have a severe disruption. So just start understanding how are they thinking about that. And again, come back to that conversation with the APRA regulated entity. Try to understand how you are supposed to oversee your partners and what are the requirements to you. What you shouldn't do, obviously, wait until last minute. Because if you're waiting for too long and don't know what it is and how to do it, I've seen it a few times, right? I've seen a contract being forced on a supplier, and if I put my hand on the heart, I'm pretty sure the supplier has no idea what it even means, and they've signed it. And there's very little limitation on liability on that one. You should not add more paperwork. You should not overpromise. You should not create very, very complex policies and say, I'm going to do all of these things, but don't actually do it. You should not add more FTEs or hours in the day for your people. You should try to make it clean and smooth, and as I say, data and very, very simple instructions and very simple kind of case scenarios. You should not treat compliance as bare minimum. You should treat it as an integral part of your business. No matter if you like it or not, it is an integral part. You should not try to copy frameworks of documents from others. This is another thing. I was not aware of it until I started seeing it. People just take something from someone and say, okay, I got it. You actually need to adopt it to your business. You really need to think about it. And often the scope for your own risk assessment is going to be very different from, any kind of other businesses. And finally, you should not accept broad terms of the new arrangements. They can seem harmless on paper, but when the rubber hits the road, they can be very expensive, very costly, and cost you either a business license or a very, very big amount of money and time from your senior executives. So be very careful when negotiating those agreements. All right. Finally, we're here to help if you need. We've been kind of working with this for a long time. We can either do assessments, gap analysis, help you get it all on the way, we are planning to run another roundtable. I forgot the name of the rules, but effectively closed doors, and we put people in the room. We play a real life scenario, and we'll let you exchange opinions on how you're actually going to deal with this and how you're going to prepare for this. So when you walk out of that room, you have a very good set of tools on your hands on what you need to do about your own business to prepare for this CPS 230 and potentially have your own strong negotiating position on when the insurer comes your way. So if you're interested, just drop us a note. We'll share the details, but it's a very good, low-key, practical, no jargon kind of conversation where things will be very clear to you in practical terms. All right, we're at the end of our presentation. We will allow for any questions. Just check if there are any. It does not look like. Please feel free. We'll give you 2 minutes to post a question. Is it possible to get a copy of the slides? Yes. Any other questions? Another minute. Thank you. Great session. Thank you. We are trying to make it simple. So if you've got other feedback, we're happy to simplify it even more. All right, cool. So no other questions. Thank you very much. I believe you're going to get certificates from Tracy, and we'll share the slides with Tracy. So maybe she can send it, or we'll figure it out, but you'll get the slides. All right, cool. Thank you so much.
Thanks, everyone.
Bye-bye.